Welcome, Anders. It's a Good Friday to do an update, and we talked a little bit before and thought it would be good timing to do a little around the world discussion regarding the meetings from the central banks. So if we start with the US, and what is Powell signaling?
So we had the Humphrey Hawken testimony in Congress, which is very important for Fed because they are reporting back to their political leadership. I think Powell was very clear that we are getting closer to rate cuts. We are not there yet, but we are getting closer. I think that clearly implies that there could be a rate cut in the meeting in May. And I think it's a very high probability that they cut rates early summer. So we have two more reports ahead of the May meeting. Today, non-farm payroll, and next week, inflation. And then we have also the same numbers for April that is released for the meeting in May. So if those numbers come in on the better side, there is a bit of a probability of a rate cut already in May, but I would say that it's very clear that they have the plan to start cutting rates by summer. So it's important that Fed is cutting rates because it puts a lid on the bond market. We've all been worried that interest rates in the US could remain high for some time, but with the support from the central bank, I think the bond market is going to come down, and that is giving support not only for the stock market, but obviously also for the general economic development.
And then we have the ECB, and they had their meeting yesterday.
Well, I think actually Christine Lagarde was equally clear. She was saying that they have seen a lot of progress on inflation. It's come down a bit. They reduced their forecast from 24, from 2.7 down to 2.4. So a substantial revision downwards on the inflation outlook. She also said that they need a bit more data, and we have a little bit more in next meeting, but we have a lot more before the summer meeting. So clearly she's indicating that by the latest in June, they will cut rates. We also had some statements from the French and German central banks coming out yesterday and today, and clearly they are pushing for a bit earlier rate cuts. So clearly the central banks are moving towards cutting rates.
And if we move on to China, then we have a 5% goal in China for growth. What do we say from the central bank there?
Well, I do think that this was actually fairly important, because the fact that they keep the target at 5% implies that they have to do something on the economic policy side. Given how high the debt is, I don't think that they will do a broad fiscal program. They have a bit of fiscal room to maneuver, but you can't do too much given that the debt is close to 100% of GDP. PBOC will have a much broader range to act after the Fed meetings and ECB meetings. So when ECB and Fed are eventually starting to cut rates, I would think that it's a very high probability that PBOC will also move, because that would put less pressure on the RMB. But there is also the factor that we have the US election. Donald Trump has threatened with very high tariffs. So I think China is a little bit cautious of moving too fast before we've seen the outcome of the presidential election. But if we take the full year of 24-25, I do think that they have quite some space to move on interest rates. Inflation is negative and yield are fairly high. So real rates are very high in China right now. So it's clear that they can cut rates and give a bit of boost to both the domestic sector, but also the export sector via a bit of depreciation on the RMB.
If we pick up there with the US election, we had a Super Tuesday in the US, so it's now that decided that Trump will be the Republican candidate. What does that mean for markets going forward should he win the election?
Well, it's clear that he is now totally dominating the Republican Party, and Haley has left the race, so clearly he's the last man standing. He has also made quite a lot of progress when you look at the polls in two crucial groups. First and foremost, he's polling very well in ethnic minority groups where the Republicans historically have been weak. Hispanic, Asians, and Black, and you can clearly see that these natural conservatives in terms of their moral values have been voting for Democrats over the years from more identity issues, and now it seems like the Republicans are actually gaining a bit there. And secondly, he's doing very well in the polls in the 6 swing states that will be kind of decisive for the electoral vote. So he's made quite a lot of progress. We are very far away from election day. A lot can happen. There is almost 6-9 months left before we're in November. So clearly we cannot call the election, and the polls are fairly very well balanced. But he is a bit in the lead, so the probability for a second Trump administration has gone up. I'm not that worried in terms of the markets. The last 2 elections, stock market has actually rallied after the November election day. Of the last 100 years, stock markets have actually rallied on average after election day. So there is a bit of a pattern here that once political uncertainty goes down, the stock market is benefiting. In terms of policy, on the economic side, I don't think the threat is Trump is that big of a problem. He might cut some taxes, and that might provide a bit of support for the stock market. He might reduce a bit of regulatory burden. You take away the risk that Biden raises corporate taxes. So the big issue is obviously the political one, that the US political system is very polarized, so it is difficult to do fiscal restructuring. There is also a national security issue for Europe here. Clearly, Trump will provide less support in Ukraine and less support for NATO. So it implies that Europe, and particularly Germany, will really have to step forward in terms of national security. So economically and for the markets, I'm not that worried, but in terms of politics, there is a big European factor here, and clearly it implies that we need to spend more on defense in Europe.
A lot more to get back to as the fall comes closer then. If we turn to the Middle East and we have oil and the price of oil with all of the turbulence that's going on there, what do you have to say about that? Well,
so far, I think I've been right in playing down the oil risk. The oil price is hovering around 83. It's been very well anchored there by non-OPEC supply. So US oil production, new fields like Guyana, increased production in Latin America and the Gulf. All of that has kind of implied that oil price is having a kind of a robust range between 70 and 90. The turmoil in the Middle East is continuing. We are now heading to Ramadan. Hamas have stepped down in the negotiations, so we won't have a ceasefire before Ramadan. And clearly that implies that Hamas is hoping that political unrest in different countries will play in their advantage. So that is a negative factor, and we might see political pressure building in some of the countries in the Middle East. So far, I think the governments in Saudi Arabia, Egypt, and elsewhere have been very clear that they don't want to have a domestic problem. But I think the Ramadan is going to be a period of slightly increased uncertainty. I stick to my conclusions. I do think that the countries in the Middle East, Saudi, Egypt in particular, are more focused on fixing their own economy and trying to get on a different trajectory when it comes to growth. And in that respect, I think the devaluation this week in Egypt, the new IMF program, and the very strong support for Egypt from the UAE is kind of building a somewhat more optimistic trajectory for a country that has been thorned by economic crisis for a long period. So I stick to the view that the oil market will not be a major geopolitical risk, at least in the near term. But obviously there are scenarios where this conflict goes wider and becomes more problematic.
Great. Well, thank you for all of those updates for today.
Thank you very much.